program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Welcome back. There are about 3,100 homes scheduled to be auctioned this week. That's up 3% when compared to the same week last year. New South Wales will hold about 1,100, with about 1,000 in Sydney. Victoria will hold about 1,400, with virtually all of them in Melbourne. Queensland will hold about 300, with 175 in Brisbane. South Australia will hold about 180, with virtually all of them in Adelaide. Western Australia, Tasmania and the NT will hold 20 between them, and the ACT will hold 87. Take a look at the most viewed properties going to auction this weekend. And in New South Wales, top property is 69 Carvers Road, Oyster Bay. This four-bedder last traded in 1969, and it looks like it hasn't been updated since. It needs a lot of work, the location is good, and it's close to Como and Janali train stations. Asking price $950,000. In Victoria, the top property is 83A Park Street, South Melbourne. This three-bedder has 2 bathrooms, parking for 1 car. It's been recently rewired and replumbed with new timber flooring and parking. Asking price $990,000. Top property in Queensland is 3 Moona Court, Mountain Creek. This three-bedder has 2 bathrooms, 2 parking spots. It's got large living areas, a big pool, and sits on 700 square metres. The top property in South Australia is 19 Hall Street, Semaphore. This three-bedder has a great sandstone facade. There's the original house at the front and a huge renovation at the back, which has massive outdoor entertaining area as well. And the top property in the Northern Territory is 19 Bedford Court, Durack. This classic top-end home has 4 bedrooms, large living areas, air conditioning, a pool, and lots of undercover outdoor living areas. Asking price is about $870,000. And the most viewed property on the REA Group website this week is an acreage located on the outskirts of the New South Wales mid-north coast town of Kempsey. The address is 72 Leaker Drive, South Kempsey. Now, this property is the most viewed on the website by a long margin. It's hard to initially understand why. It's a modest home, 3 beds, 1 bathroom, big shed, and a solar system. The land size is 22,000 square metres, which is what this sale's truly about. The land is fully fenced, includes a few paddocks, chicken run, and separate coops. It doesn't say in the ad, but developers must be pretty keen on this block. Asking price is $845,000. And for more on property, I caught up with Angus Moore from REA Group.
Yeah, thanks for having me, Ed. Look, it certainly is. We're kind of well into the year now. The auction market's really kicking off now, and we'd expect to continue to see pretty busy conditions over the next, kind of month and a bit as we head towards Easter. Things tend to quiet off a bit after we hit Easter. Quiets down for winter a bit, but certainly it'll continue to be pretty busy until then. The maybe good news for vendors at the moment is we are seeing a bit better conditions at the moment than we were towards the end of last year. Auction clearance rates have been a little bit stronger in Sydney and Melbourne so far this year, and we're actually starting to see some volumes where we can be a bit confident that that's true in the last few weeks than what we were at the end of last year. So, signs are pointing to better conditions than we have seen.
All right, clearance rates picking up. Is there anywhere around the country that's performing a lot better than some of the other capital cities?
Yeah, look, at the moment, we've kind of seen that pick up in both Sydney and Melbourne at the moment. Melbourne is seeing stronger clearance rates than what we're seeing in Sydney, and that was true towards the end of last year as well. So, kind of just keeping parallel there. But both have seen clearance rates kind of come up about 5 percentage points from where they were at the end of last year. In terms of conditions more broadly, the Perth market out west remains just really very tight. There's just not a lot of properties available for sale, and that's been true for, going on 3 years at this point. And so homes are selling a lot faster than they used to. It's pretty similar stories in Brisbane and Adelaide, though, maybe not quite to the same extent as what we're seeing in Perth, but both those markets remain pretty competitive as well.
All right, this week we did get some inflation figures. They're only monthly, so they're not the quarterly number the RBA looks at really closely, but we did see headline inflation come in at 2.5%. How does the RBA interpret those figures?
Yeah, look, I think it's probably not going to have changed the RBA's view. Obviously, the monthly measure is still a little bit experimental. It doesn't cover everything that the quarterly measure does. So, it's definitely not as closely followed as that quarterly measure. But the fact that the kind of underlying measures in that monthly inflation release came in at sort of 2.8, 2.9%, depending on what you're looking at, I think it's going to be pretty consistent with the RBA's view that underlying inflation this year is going to be back inside the target band. It'll be on the high end. They're forecasting sort of 2.75% throughout this year. But 2.8, 2.9 is probably tracking in line with that for March.
Yeah, do you think there is still a chance we might get another rate cut over the next few months?
I think there's certainly a chance. The board's really watching the labour market. I think that really remains the only kind of sticking point against why we wouldn't see another rate cut, given that inflation is going to be back inside the target band. The RBA is still looking at how low the unemployment rate is, and it is important to remember it is kind of sitting around 5-decade lows at the moment. So very strong labour market performance there, and they're just probably a little cautious that if that remains really tight, if that starts feeding through into wages, we could start to see sustained inflation that pushes us back outside the band. To date, that hasn't happened. Clearly, we haven't been seeing very strong wage growth. It's been stronger than it was, but certainly nothing that's concerning to the RBA at the moment. So I think that's not going to be a bar to further cuts, but it is certainly something they'll be keeping an eye on.
All right, next week we've got the GDP figures. We've obviously watched them very closely, but there has been a little bit of info being released by the ABS already in the lead up to that, including construction work data. What's it showing us about Australia's construction sector and how it's tracking?
Yeah, obviously the week and a bit leading up to the national accounts is closely watched by economists and perhaps no one else, as we get all the many partials that feed into the monster release that is the national accounts. So one of the ones we got out this week was construction work done, which measures, funnily enough, the value of construction that has been done in the December quarter. What it showed was there is a bit of a pickup in resi construction, about 1%, a little bit under compared to what we saw in September. Now that's in terms of the volume, not necessarily the number of homes. We won't get data on the number of homes for a little while yet. That comes out with quite a lag. But that is kind of pointing to good news. Construction has been a pretty subdued sector for really a number of years now. In fact, we're kind of still below what we were doing in the 2010s when we were building more like 55,000 homes a quarter. For reference, at the moment, we're building more like 40 in that order. Mm-hmm. So, we're just not building as many homes. There's a lot of reasons for that, but the fact that it's starting to pick up is hopefully a good sign.
And the GDP number itself, I mean, we know economic growth last year has been pretty weak. You're expecting it to remain reasonably weak in that final quarter.
Yeah, that's right. Expectations are still for a fairly soft print. Hopefully coming up a little bit on what we were seeing throughout much of last year, but certainly nothing like, what was true during stronger growth periods. I think we're still expecting below trend growth.
Angus Moore, thanks for coming on the show.
Pleasure. Thanks for having me, Ed.